Coleman's 2015 Certified SBA 7A Loan Closer Training Week 5. I am back from my hiatus, Lance.
It's good to have you back, Bob.
How did Joseph do? Did Joseph do okay?
Well, Joseph did fine. I think we've had 2 office hours recently without you, Bob. But it's good to have you back. I just wanted to crawl in your suitcase and travel with you.
There you go. There you go. We're over halfway through. Congratulations. Good, engaged class. Let's go to the polls. How often in your SBA lending?
Oh, boy.
How often in USBA lending do you actually have to complete a SBA Form 912 and get clearance?
You know, Bob, I could blame that on being from the South, but I think that's a typo on my part. I guess the reason I asked this question, Bob, for those of us who have been involved in SBA lending for a long time, the SBA Form 912 was a standard. And you had to get it on every SBA loan, and then recently that changed. So I was just curious how many times that our group are actually having to get the 912s and get them cleared.
Majority of them.
Yeah, that's interesting, Bob. And you know, the thing that's fun is you'll see a lot of banks who include the 912 as a part of their standard document package, even today, when it's not required. So we did cover that this week, when it's required and when it's not.
Are you a delegated lender using either Express, POP, or both type of SBA loan programs?
Well, I'm just curious, you know, I guess my point in this question is to encourage SBA lenders to get signed up for Express lending. It's a great way to provide a very timely SBA loan product to your customers. The same thing's true with POP. If you've been doing SBA lending for a number of years, I would encourage you to get signed up for POP. Looks like everybody's involved, Bob.
And don't forget the export program. The only one with
Absolutely.
90% guarantee. How do you complete the SBA Form 1919? The bank does it with the loan officer and the borrower. We let the borrower take it home. We accept the completed form from borrowers and the loan broker. It is a mixture of the above.
You know, my thoughts, Bob, as a best practice on the 1919, one of these is my preferred way of working on or completing an SBA loan. None are wrong, but they're certainly preferred. And you know, my preference is to have the borrower in front of me and to walk through the 1919 with them to make sure that all questions are answered. It's a critically important form in the underwriting and closing process of an SBA loan because, Bob, it helps determine eligibility. So I think it's good to have bank officer, bank closer involvement in the completion of the SBA Form 1919.
Lance, we did a survey for the government's fiscal year, September 30th, say, hey, how'd you do? You ahead of goals? Are you behind? How'd you do? Most of the people said they were in pretty good shape. What was interesting in the comments, though, is several people indicated that for the smaller loans, i.e. loans less than $150,000, deals were just dropping off the face of the earth. They weren't getting the paperwork back. My take on that is these borrowers are going on to the web and they're going to alternative lenders and they're not going through the hurdles that SBA 1919 requires. So I would strongly encourage you to not give it to the borrower, to have someone hold that borrower's hand to get the paperwork done. Otherwise, you're going to lose the deal.
Well, I had an alternative lender in my office this morning, and we had a long discussion because there are projects that I see that are not in the bank's wheelhouse. Mm-hmm. So, I mean, I don't want to lose the customer. I'd like to keep their deposit business, and the alternative lender certainly provides a solution. The one thing that I've noted in the evolution of alternative lending, there are more legitimate, professional alternative lenders today than there have ever been. And while they are not, well, they are direct competition for us as SBA lenders. And quite frankly, Bob, your point is an excellent point. Proactive participation in the collection of SBA documentation is the way to keep the borrower engaged and the way to keep the deal on the table for the bank. And the 1919 is the start of that process.
And part of it also is educating your borrower, and especially for the loan closers, is to clearly lay out how much this is going to cost them by going with an alternative lender, which are credit card rates code for 25, 30% APR versus 6-7% SBAs.
You know, the fun thing is the alternative lenders quite often, Bob, will talk about what I call competitive interest rates, but in reality, when they get they have these tranches and they have these private sources of money, and there's a tranche of low risk 6% money, there's a tranche of high risk 20% money. They lean more
higher. I've seen 35, 50%.
Absolutely, but the underwriting process with them is more filling the trench, and you see a lot more of there's a lot more money spent on the higher end, the 20 to 30% rates. Now, there's not a lot of due diligence required for those, but again, I think an SBA lender wants to do their best to keep the borrower engaged, and part of keeping the borrower engaged is being proactive in helping to get the documentation completed.
When do you submit the SBA Form 159 compensation agreement with the application with the first 1502 report? I assume there's a reason why you're asking this question, Lance?
Well, I'm just curious because the SOP certainly indicates when it's supposed to be submitted. I think that a lot of lenders actually submit the Form 159 with the application itself if they're doing it GP processing. For delegated lenders, obviously you're not submitting the 159 with it, but the SOP is very clear that SBA Form 159 should be submitted to Coleman about the time, once that first disbursement's made, it's supposed to be submitted to Coleman. And you can go in the SOP 5010-5H and do a control find and type in SBA Form 159, and it'll provide you the email address. At my bank, the way we have it set up, the SBA Form 159, the closers scan and funnel those to the person who does the 1502 report, and each month when the 1502 report goes in, they send the 159s in to the appropriate email address.
Very good. Tell us what the week 5 takeaways are.
Well, week 5 we talked a lot about documentation. I think the big takeaway is the 1919 is a critically important form. And Bob, I work both sides, origination, closing, servicing, liquidation, but if you ever have an SBA loan that goes into default and goes into liquidation, that 1919 becomes critical that it was done properly, the questions were answered correctly, and you as an SBA lender really need to know and be comfortable with the answers that are on that form, because that determines eligibility. And the one thing that can get a denial on an SBA guarantee is the loan was not eligible. So, you know, my challenge is I want you to be involved in the completion of the 1919. I want you as a lender, as a closer, to be comfortable that the form has been completed thoroughly and that you're comfortable that the answers are correct.
Accurately. I would not allow the loan broker to be heavily involved in that process.
Yeah, because they may just go through and answer the questions in a way that'll get the loan approved. The other thing on week 5 that I think is important is just understanding the 159, when you're supposed to get it. And we have an email question that's going to kind of allude to a 159 issue that I'll talk a little bit about. And also the 912. The 912, I've been working on my SBA lenders in my bank. It's not required on every SBA loan. In fact,
no longer.
It's only required on a small percentage of SBA loans.
Yeah, let's don't
do work that we don't have to do.
Email question. Is there an affiliation when there are two different LLCs with different names, but similar, same owners? In one of the training sessions, it was mentioned that the fees were, oh, is that a separate question?
Well, I'll address number one first, and then we
go ahead.
If you have common ownership, that creates the affiliation. So if you have two separate LLCs, and let's say Bob and I, Bob's a 60% member and I'm a 40% member in each of the LLCs, there is in fact an affiliation that's going to come into play in determining size standards. It also comes into play, let's say, Bob, we had Bob LLC that got a $500,000 loan, and Lance LLC got a $100,000 loan 2 weeks later. That affiliation would impact the guarantee fee on those loans. So, correct. But in this particular case, common ownership, common management sometimes can create an affiliation, but the common ownership in these two LLCs absolutely creates an affiliation.
Spoiler alert, though. It looks like this rule will change after the first of the year, correct?
That's exactly right. And one thing, Bob, that I will be grateful for, as somebody that's been involved in SBA lending for a long time, and I know our closer group will too, understanding affiliation, it's not clear-cut. There are gray areas, and SBA is pledged to simplify understanding affiliation.
Yeah, it looks like what's going to happen, let's say you and I have a 60-40 on Bob and we're 60-40 on Lance and you're at 60-60. Under the new proposed rules, the majority shareholder is deemed to have control, and therefore you and I would not be affiliates in that scenario, which I think is great for family businesses where you have the nephew who wants to loan money to the niece to start another restaurant or a hotel or franchise. You know, where we got the idea that we don't want deep pockets, parents or aunt and uncles involved. I don't know who made up that rule, but it looks like that's going to go away. Now, today you still have to follow this rule, but be on the lookout for change.
Yeah, it appears after the first of the year that's going to change.
Second question, looks like it's a fee calculation. What are we doing on this?
Well, you know, they're saying that you can charge a 2% fee, and they're asking on $1 million loan, can they charge a $20,000 packaging fee? And the answer to that is yes, you can. It's within SOP requirements. Now, one thing I want to share with you, you're going to have to complete the SBA Form 159 if you're going to charge a packaging fee. And up to the $2,500 mark, you don't have to explain what you did on your packaging fee. It's basically you got a $2,500 free pass, and you can just call it a packaging fee. Once you go over $2,500, you have to itemize what you have done in completion of that SBA loan package. And the Inspector General has started looking closer and closer at these SBA Form 159s. And part of it's because you would have brokers that would get a referral fee and maybe a packaging fee, and they report one and not report the other. But the Inspector General is taking a closer look at the 159s. So could you charge a $20,000 fee? Yes, you can. But you need to be able to justify it. You're going to have to itemize what you did as a bank to justify that $20,000 fee on the SBA Form 159.
What can I charge as an hourly rate? Is the SOP silent on that?
Well, the SBA SOP, it's the language is against standards. For instance, charging an hourly rate don't really fit. I think it needs to be more appropriate on the level of work that you did in putting the SBA loan together. Another thing you'll see in the SOP, it can't just be for filling out SBA forms. The SOP says you can't charge a fee. So, my contention is, can you charge a $20,000 fee? Yes. Could you justify it? I don't know. Probably. My personal thought is it'd be very difficult to justify a $20,000 fee on an SBA loan just for packaging. You would have to have a significant level of work in putting the loan together. So again, just because SBA says you can do it doesn't mean that you should. It needs to be, if you're going to charge a packaging fee, you need to have done an appropriate level of work as a participant bank with that borrower on the SBA deal.
So you're saying the fees need to be prudent and reasonable.
Bob, I tend, unless it's a really complex project, Bob, I tend to charge $2,499.
I think that's fine. What are we learning in week 6?
We're going to talk about collateral requirements, citizenship issues. We're going to talk about franchises and affiliation. Again, we're going to see some changes. And in 2016, I have a feeling we're going to have to update week 6 to fit the new affiliation rules. We're going to talk about the 4506T and what you're supposed to do as a prudent SBA lender related to that. And it's a very critically important area because on early default loans, when you look at the areas that the SBA is going to grill on an early default loan, the 4506T, the tax transcripts, and the reconciliation, those are critically important items. We're also going to talk about SBA's SOP rules and language related to insurance coverage.
And Lance, I know you always love to tell the story of, oh, we got the 4506 back, but we never bothered to check it.
Well, and I think it doesn't require a 20-page memo related to the reconciliation. In fact, it could just be a few check marks, the lender's signature and date on it, just showing, when I do loan reviews, Bob, I'm not looking for something that is incredibly lengthy because in most cases, your transcript and your tax returns are going to be the same.
Make sure you check them.
Make sure you check them, and you want evidence on the transcript that shows that you did. And again, it may be as simple as a few check marks, a signature, and a date. And if there are any variations, you want to make sure there's a memo explaining those.
And you're going to go into that on it's okay to have a variation from time to time.
Absolutely.
Very good. Do we have any questions, Joseph? We're clear. Everyone, enjoy the week. Enjoy your weekend. We'll talk to you next Friday. Thanks a lot.
Have a great weekend. Thank you.